Welcome back to another video. So if you have ever found yourself stuck wondering when to hold on to a stock, when to square off, or even how to handle penny stocks, you are in the right place. I'll break down some powerful market indicators like PCR, widely known as put call ratio, explain when to make a move in the stock market, and share how to handle the high risk trades like penny stock with logic, not emotions. I'm talking about those stocks that could give you 100% or 200% return and they cost around 10 rupees or 15 or 20 rupees or something like that. Whether you are a beginner or already trading, you will walk away with clarity, confidence and strong strategy. So let's dive in straight. All right. So I've got plenty of strategies and all that I would love to share with you guys. So for that you need to stay connected and before you ask me what I do, I this is my passion, studying in stock market and all. I do a lot of researches and all. I have been in this market for quite a long time now. Mm, so, our first topic of discussion, what is put call ratio, aka PCR, right? So, let's start with the put call ratio, commonly known as PCR. This is one of the most underrated yet extremely useful indicator in the option market, right? PCR is calculated by dividing the open interest of put options by the open interest of call options, right? So it's like call option takers and put option traders. Those who are into option trading, they have wide idea about this, but I will break it down and I will explain how it works and how you can calculate all these things. So in simple terms, it tells us the ratio between traders betting the market will go down versus the betting between up and down. So basically it tells us the ratio between traders betting the market will go down versus those betting it will go up, right? So I hope I have made it clear, so I will explain it. So let's say the total open interest of put is 1.2 million and the call is 1 million. Then the PCR is 1.2, right? So that means more people are holding put options, indicating a bearish sentiment. But here's the trick. When too many people become bearish, the market tends to, do the opposite thing. It's called contrarian indicator, you know. So generally a PCR above 1 means bearish sentiments, a PCR below shows bullish sentiment, and PCR around 1 signals neutral stuff, right? So in that position you can stay in the market. But extreme matters. If PCR goes above 1.4 or 1.5, the market is said to be oversold, meaning the crowd is overly bearish and reversal may be around the corner. On the flip side, if the PCR drops below 0.7, it suggests that the market is overbought. Everyone is too bullish and the correction could be near. So watching PCR values regularly helps you understand whether you are going with the crowd or possibly falling into a trap. So as I said, you need to make wise decisions, right? You need to stand out of the crowd. If someone is losing the money, then only you will be making the money. That's the harsh reality of the market, right? So now comes the second part. When should you hold or buy the market? Okay. Now that we are understand like PCR, we have understood it. Let's talk about when you should hold or accumulate in the market. Okay. There are usually three key indicators. Like I personally look at market sentiment, price action, and then there is volume. Without volume, I don't do anything. Volume indicates whether I will be getting any kind of volatility or not, whether the market is tradable or not. When all three align, it becomes much easier to take a confident position, right? So let's say the market is falling, but the PCR is rising above 1.3, and the index VIX, I mean India VIX, widely known as VIX or India VIX, whatever you want to say, you can just search it out over Google. You will easily be able to see the India VIX thing, and which shows the market fear is dropping, right? So indicate whether the market is, what is the sentiment of the market, whether it want to, whether it's feared or whether it's confident. So with that you can take the decision whether you want to buy or whether you want to sell. So that's a clue that while the price might look scary, smart money is positioning for a bounce. If FII, so let me tell you guys what FII is, right? So foreign institutional investors, for those of you who don't know, who are like watching this video for the first time, and hold on to the very end, I will be sharing with you guys a tip. So that is like non-negotiable kind of a tip, and with that you can make a shit ton of money, and there's nothing like wrong. A simple psychology, a simple thing I will be revealing at the end of this video, so for that stick to that. So that's a clue that while the price might look scary, smart money is positioning for a bounce. If FII data also shows heavy buying, that strengthens the case for holding or even adding more support levels. Here is practical tip. When the Nifty or Sensex hits a major support level like 200 EMA on a daily chart and PCR is 1.3 or higher, it often signals to hold or accumulate, right? Also, low VIX, anything below 13 or 14 usually indicates reduced panic. That means sentiment of the people are in buying position, meaning the market could remain steady or start climbing, as I told you. These are like the basic things that you should know before entering the stock market. And let me tell you, like if you intend to do option trading from day one, it's gonna be hard for you and you might end up losing a shit ton of money. Like I know you guys are putting your hard earned money over there, your salary money over there. So just use your brain instead of just listening to other people saying I have made 1 lakh 2 lakh easily. Okay, don't listen to people or just content creators who said I am making 1 lakh 2 lakh in a day. So that's not what you should be seeing. You should be seeing how much money they are losing in a single day, how many days are they profitable in a month or in a financial year. That's what you should check. So again, I don't want to raise any kind of finger on anything like that, but you should make wise decision. Also, low VIX, anything below 13 or 14 usually indicates reduced panic, meaning the market could remain steady, that it could climb. That's your sweet spot to hold your position or buy deeps with a clear stop loss in mind. Again, the stop loss shouldn't be more than 5 to 10%. Now, when should you sell or square off? Like, let me tell you the logic or how my fundamental kind of things works, how I balance this kind of, stuffs. So on the flip side, when, should you consider selling or squaring off? Okay. The answer again lies in reading indicators together. If the PCR drops below 0.7, the market is hitting resistance level. That's a red flag, right? Just like your X. And to that, a rising VIX also above 18 or 20, you have got fear entering the market. So if you see like the VIX is around 18 or 20, so that means the market is in a fear mode, right? So it doesn't feel confident. Even if the price haven't corrected much yet, the underlying data says something not right. So if you have checked yesterday VIX, you will know it was above 20. So the fear index was pretty high. Also, pay close attention to volume. If a stock or index is rising but volume is dropping, it could be a case of weak hands, pushing prices high, often before a sell-off. Combining this with FII data showing selling and PCR dipping low, it's time to square off or reduce exposure, right? So I shouldn't be saying this, but you know how the market operate, how the big bulls operate. You most of the time you get the news that this stock will go up and down when it has already surfaced over 80%, and the big bulls they show you the news when they plan to sell the stock at 100%. So that is what you should know. Like whatever you are seeing over TV or in news and anything, don't believe in all those kind of things blindly. Here's the data backed insight, right? During past corrections, such as in 2020 or 2022, market showed extremely optimism just before they started falling. PCR went down, VIX rose, and institutions players started exiting, while retail traders were still hopeful. Since retail traders don't have that much kind of insights and they don't have that much kind of idea, they tend to stick with the money instead of making cutting down the losses. They tend to take much more losses. The portfolio, if you see the professional traders, they might have lost just 5%, and they will do, what they will do, they will just buy deep. They will just buy when the market has already gone 2000 points, 3000 point down, then they will start buying. On the other hand, you won't be able to take the enjoyment of that ride. Okay, so let me explain it. PCR went down, VIX rose, and institutional players started exciting while retail traders were still hopeful. The lesson: indicator speaks louder than any kind of hype in the market. All right, so now let's talk about penny stock. Buy deep or exit fast. Okay, let's talk about this. Now, penny stock, most of you guys know, if you have been following me for quite a while, that I bought Yes Bank and I had around 2 lakhs or something like that invested. And my sentiment was like, at that time when it went 30, my point was like, let's sell it. But since it was not being held by me, my dad used to hold that. So he was like more into sentiment kind of thing. Let's hold it, it will go high and all. He was listening to his friends and all. So my fundamental at that point of time was like clear. Let me diversify this money, but his thought process was different, and hence it's still around I think 18 or 17, something like that. It's still pretty much in deep. So now let's talk about the most tempting part of the stock market: penny stock, 2x, 3x, 100x. These are low price stock, typically under 50 or even 10. As I told you, you can easily find stocks like which are listed for 5, 4 rupees or something like that. And they attract a lot of attention because of their explosive return potential. But with high reward comes high risk, right? The first thing to remember is never buy a penny stock just because it's cheap or someone said you to. Keep that in your mind. Many stocks are cheap for a reason: poor fundamentals, declining revenue, debt issue, or regulatory problems. Right? So, when should you buy deep in penny stocks? Only when you see sign of turnaround. That means promoter shareholder is increasing, debt is reducing, quarterly results are improving, even slightly. There is consistent volume build up, technical breakouts from long-term consolidations. If those factors are present and you are getting in early before the crowd, it could be worth smile, worth the small allocation of your capital. You could invest. I won't suggest you to invest more than 10% of your portfolio into this kind of penny stock, or more than 10,000 to be precise. 5 to 10,000 is what I would max recommend you. If you have got 1 CR portfolio, then you can think about investing 1% over there. But else, I will still suggest you not to do more than 5% of your portfolio into penny stocks, and that to diversify them. If those factors are present and you are getting in early before the crowd, it could be worth a small allocation of your capital. But always have a plan to square off fast. So in this kind of stocks, they really fall down pretty quick. So sell or exit a penny stock when you get like exceptional return, or you get your calculated return, that is 30%, 50%, 100% for each and individual stock. It is different. It's not same for every stock. Remind that. Okay, the volume dries up, promoters start selling or pledging shares. I will explain how pledging works actually in next videos. And the stock, the stock spiles irrationally without any news or earning supports. You should be, keep on a track of this kind of stuff. I will later on link some website from where you can check all this thing. You can use money control app over there. You will get all the idea of latest stocks and all, and about the VIX, everything you will get to know over there. You can use it. Now let's talk about certain strategy that I was planning to tell you guys. So combined strategy, real market logic. Let me put this in this way: like hold or accumulate. When should you hold or accumulate? Like if the PCR is above 1.3, then you should hold it. But if you see it it went above 1.7, you should start selling it. I am telling you guys my logic. Now VIX is below 14. This there are some there are some criteria that I am just telling you guys right now. Market is near support, FII, DII are buying, volume is picking up, or quantity stocks, right? Now when should you square off or sell? PCR is below 0.8. Okay, below 0.8 then you should sell off, and VIX is below 18, square off or sell. Market near resistance, if II selling increases, volume dries up, penny stock spikes without logic. Okay. Now now use stop loss in every trade. As I told you, 5 to 10% should be your stop loss minimum, bare minimum. 5 to 10%, don't think anything. Also, follow a 1 is to 2, 1 is to 3 risk to reward ratio at least. If you are planning to hold it for long term, then also. Meaning, never take a trade where your potential loss is equal to or greater than your gain. Again, I am repeating this. Stop loss is a necessary asset of your trading journey. Keep that in your mind. Alright. Now, final thoughts. The stock market doesn't move on random luck. It moves on psychology, money flow, and timing. PCR helps you decode market sentiments, VIX measures fear, and volume shows real interest. Use this to make market, better decision in the stock market, not emotional ones. I again repeat this: do not make any kind of emotional statement or emotional, actions. And when it comes to penny stock, remember that hype is loud, but facts are quiet. You will heard a lot of traders or telegram channels promoting this kind of shits, but don't get into this kind of things because you might end up losing a lot of your money. An influencer or anything like that who don't even have knowledge about this kind of things, you shouldn't be listening to them. If you are even listening, to make sure to check their credibility, make sure that they have enough knowledge to provide you or they are learning. Dig into data, follow the money, and protect your capital at all costs. Remember this: making 2% of your capital in a single day is far better than losing 5% of your capital, 50% of your capital in a single day. Just keep that in your mind. 22 trading days almost in a month, 21, 22 trading days in a month. And if you are making around 5% in a day, that's more than enough. You should keep realistic expectation, right? Now, would you like to get this kind of informative kind of videos, or should I be trading live? And let me tell you, I will be covering a detailed journey of my trading, and I will be also teaching you guys like live for free. Nothing. I will be just giving you guys free lectures and sharing my thought process and how I think, how I make profit or how I make losses. So let me tell you this: like, I have made so far more than, you could say, somebody's annual income amount of losses. That's what I can say. That's the loss amount that I have incurred, and I won't be revealing the amount right now, but yeah. So I have got quite a lot of idea about the stock market, emotions, and psychology. Now, next video will be about VIX and how you can calculate VIX, or how you can trade in 100% positive manner, right? So I will be explaining like whether the market will be going down, or how you can calculate how much market will go down or up today, or in a week, or in a month, or in a day. Okay. So I will be creating all those kind of videos. Stay tuned for that and make sure to subscribe this channel. I'll be bringing on this kind of informative videos and all. So thanks for watching. Bye bye, sayonara. And by any chance, if you are into crypto trading or forex trading, just you can check on the link and you will get a free course if you do join with my referral link, or the link that I will be providing below. You will get a free ebook and free lecture, of course. There I will be sharing 2 or 3 of my strategies over there, will be there. Simple strategy, nothing. And you can join my telegram channel. Over there I will be providing free trades over there, not in Indian market because that's kind of illegal, but over forex I can do that. And let me know how you guys intend to trade. So that's it for today's video. Hope this video was valuable for you guys. Bye bye, sayonara, take care, peace out.